Hey guys, welcome back. In today's video, we are talking about the extreme pressure on shorts, quietly closing short positions, the all-time high ahead of us, and many more in this video. First, we're taking a look at this. Retail investors, don't lose sight of the bigger picture. Even conservative estimates still place AMC's total short interest around 319%. The volatility, media narratives, and prime swings don't change the underlying math. Shorts haven't closed. So this is going back to something we talked about in the past before, where we used the indicator, which we saw that the total short position for AMC is coming in at 1.7 billion, so 324% of the flow, as opposed to the 24% that's being shown. Now, even then, this is still a conservative estimate because we've talked about how it doesn't include every piece of data that shows AMC synthetics. This is something we talked about in the past before. For instance, it doesn't include the quadrillions of tokens that exist out there for AMC that have been used as a way of locating. And so that itself would already add another 10x flow, 20x flow if we talk about it. But even then, we are seeing a 1.7 billion flow of AMC being shorted. And so this is how we know that right now, everything that we're looking at are all synthetic short pressure. And is why we've always talked about with how they're trying to give us a fake number, a fake piece of data, when in reality, they have been shorting AMC to an absolute extreme, and they're trying to prevent those short positions from blowing up. Now, the reason I say this is because if you take a look at the ownership of AMC, by now you should already know that AMC is retail owned, or more specifically owned by apes. Now we can see retail owns AMC. Apes are the true majority shareholders at 10x for retail. What we are seeing right now with the data that's being published to us is that institutions owns 38.37, insiders with 2.39, and then retail with 59.24. Now, we have always questioned this because what we've always seen in the past before, if you go back a year, what we saw for retail ownership was that of 85%, 90%, and even higher. Now, one thing for certain is that yes, institutions have been accumulating, and that was always the biggest giveaway of how we knew that they are in need of AMC shares, because they have always been quietly accumulating shares. But the fact that they are showing that retail only owns 59%, like we've said, the real shares, the shares that were bought back in 2021, back when all of these things happened, they're owned by retail. 95% of the real shares are retail owned. Right now, if you include all of the synthetics that have been created and injected into the system, then maybe institutions have 38.37%. But this is because we've seen the flow that have been 10x, 20x, 50x, or potentially even 100x. So out of that 100x flow, retail owns 59.24, institutions own 38.37. But that should already show you about the fact that because there are still synthetics, the fact that there is synthetics being created and institutions are still willing to buy, it should really show you how lucrative AMC shares are and what the demand is for AMC. And so it's how we've always seen that they have been trying to buy into AMC. And if you take a look at the comparison, the GME's reported short interest in 2021 was far lower before it exploded from single digits to over $400. History showed what can happen when extreme short interest collides with retail conviction and pressure on short. So let's talk about that. Now, whether it's for GME or wherever it was for car, what we talked about recent with the short squeeze, all of these short interests up until the short squeeze were all shown an incredibly low amount, an amount that shouldn't be related to a short squeeze, yet we were able to see it explode. And the same thing applies to AMC as well, because firstly, like I said, the reported short interest has always been self-reported. It has always been far lower than what it actually is. And we've already seen an example of it here. 124.11 as the official short interest, when the reality was 1.7 billion, and of course, even higher. But not only that, it's talking about retail conviction. And just like we talked about here, the very fact that AMC is still retail owned by 59.24%, despite the fact the flow has been created 10 times, 20 times, 50 times over, that is already showing conviction. And that's how we're seeing that we are going to create the pressure on the shorts, how we're going to create the short squeeze. And if you want to take a look at the shorts that are panicking, you can already see here, Citi cut its target to US 1.10 while keeping the sell rating, indicating concern that the stock may still trade above what its analysts view as fair value. Yesterday per Fintel, Citi closed 100% of their put position. So inquiring minds would like to know who's really concerned that the stock may still trade above what its analysts view as fair value. So this is a big thing to really look at. It's the fact that we're seeing how they are trying to portray AMC as a sell. They're creating these short positions on AMC. They're saying AMC is overvalued. They're thinking and saying that AMC is still going to fall further in the short term, yet they're doing the complete opposite. If you had a short position on a stock and you think that this stock is going to continue falling, you wouldn't exit your short position. You will obviously ride on that position and profit as much as you can. Yet for Citi, who cut the target, who keeps the sell rating, did the complete opposite of that. And this is what we've said with how we are applying pressure towards these short sellers and how retail conviction is the ultimate fight against these guys. It's the ultimate move against these guys because they realize they can't keep doing this and they have to close their short position because it's obviously eating into them. And now, like we've already seen, AMC's enemies lost leverage to stop AMC and can't even slow AMC down anymore. No strikes, no slow walking movie production, every studio kicking into high gear to land choice IMAX and exhibition starts, of which AMC is the leader. AMC MOAS because it is there. Now, a big reason for why we can see how institutions are closing their short position is because they realize that fundamentally AMC is improving. Nothing that in the market right now, in the industry, is doing anything to actually slow AMC down. We're not talking about the chart manipulation, the constant spoofing, tokenization, synthetic shorts, FTDs, options. We're not talking about how institutions are spending billions of dollars to stop AMC from moving up in the chart. We're talking about how in real life, what's affecting AMC's fundamentals aren't actually negatively impacting them. We see how AMC is making new partnerships. We see how AMC is making new revenue streams. All of that, it's leading to how AMC is improving infrastructure, improving debt, improving revenue, improving profit, improving everything that we've talked about. And that's how short sellers are seeing this as a reasoning to sell their short positions because they realize that eventually AMC will go up because of how well it's doing. And the same applies for this as well. We talk about retail conviction, and this is what we're seeing from apes as well, who are constantly buying into AMC. And this itself has what's been the most powerful factor for the last few years, how AMC has not actually lost to these short sellers, how apes have not lost to these short sellers, because it's not just one or two apes that's buying into AMC. That's more importantly not selling their AMC, but it's tens of thousands, hundreds of thousands who are all united, who are buying into AMC, who are lighting each other, who are telling each other what's actually going on within the scenes and not selling their shares despite the pressure that is being forced upon us. And that's what's been the most powerful weapon. And you can see it's my firm belief that AMC all-time high is ahead of us, and that it will be determined by AMC apes' collective ability to hodl. And like we said, one of the most powerful things in the past has not only just been the fact that apes have been united, but it's the fact that we have been buying and not selling. We have not been giving in to the short pressure. And that's how the short sellers have not been able to obviously beat us. How AMC has not gone bankrupt, how the squeeze is still alive, because everything that we're doing right now is exactly what the shorts fear the most. And you can see here, our company announced new revenue streams, paying down debt, and the industry looking best as it ever has in the uptrend. The other company has announced a $3 billion list for the first time since 1957 on a downtrend, but yet there's a pure difference. Now, if you take a look at here, it's obviously between Cinemark and AMC. And we have talked about this for a very, very long time because it clearly doesn't make sense for AMC, the biggest within the industry, the company that's continuously innovating, improving, announcing new partnerships, announcing new revenue streams, decreasing them, doing all of these things, yet it's not going up. But companies like Cinemark is going up when we are seeing the same box office, the same industry. Now, a big reason for this is going back to what we've said at the start. The fact that it's because AMC has a majority retail ownership, whereas Cinemark has a majority institutional ownership. And that itself is the biggest reason for why Cinemark is going up and AMC is not. Because when you take a look at the theatrical box office, we're seeing why AMC should be going up. We're seeing the same effect for all companies because we're seeing the same box office. But the difference is AMC profits more off this. AMC gains more of the market share of the box office. And the fact we're seeing the box office going up and AMC is going down, that itself already doesn't make sense. And it doesn't even stop that because we're seeing the strongest domestic box office start in years. And we're seeing how we're already ahead of 2025, we're ahead of 2024, ahead of 2022, and we are ahead, against pre-pandemic as well. This is what we need to realize. This is how AMC is thriving, how AMC is improving, and yet the price doesn't reflect it because of the suppression. And it goes back to what we said earlier. Despite every suppression and manipulation that goes on to AMC, apes know exactly what's going on, and we're not willing to give up just like that. And if we're going back 10 years right now, again, if you take a look at this, you can see 33% of annual domestic box office revenue comes from January to May. 66% comes from June to December. So the fact that AMC has already done so well in Q1 and gonna very likely do extremely well in Q2 as well, just imagine how well they're going to do for Q3 and Q4. So realistically, the biggest boost we're going to be looking at from AMC is going to be coming in from Q3 and onwards. And so I'm definitely excited to see what's about to happen then, especially with the massive boost in revenue, in profit, and we're definitely going to be seeing more and more things happening. Also, on top of this, AMC crossed 1 million A-list members in Q1 2026. With monthly pricing at an average of $28 per month, that's roughly $336 per member per year, generating around $300 million to $400 million plus in annual recurring revenue that's still growing. So think about this. Think about how much money AMC is already making right now. So this is deep value, but not only is this deep value, is the potential AMC has with this. Firstly, if 2 million joins the A-list, the annual recurring revenue could be more than AMC's own market cap. Now, this is very important because now we're talking about how AMC can pay off their debt. Now we're talking about how fast they can pay off their debt, how fast they're able to buy back shares, and how fast they will be able to have the ability to issue dividends. And so you can see how powerful this is. And not to mention, with the partnership that they're doing right now, it's going to encourage even more people to obviously sign up to the partnership. So this is exactly what we want to see and how we know that AMC is going to continue growing. And if we take a look at this right now as well, we talk about the Netflix partnership, we talk about the Netflix demand for AMC as well, how they are in need of AMC. All of these things are just leading to AMC going to that next level. So this is what we said with how not everyone is realizing just how much value there is. When you throw away the short squeeze for a moment, just talking about how undervalued AMC is with everything that it has going, it's already a big opportunity. And that's one of the biggest reasons for why we've been seeing institutions trying to buy into AMC. Now, also from this as well, we have been seeing the AMC financials. We've been seeing them filing the 8K, and now we're seeing the cleaner balance sheet. We see the refinancing, and again, some people may be talking about this because we have to realize that AMC wiped out more debt. They issued out more shares, but in return, it was debt that was wiped out. And now there is no more high interest payment. And I think that this is a very good thing because just like we talked about, when AMC is able to pay off their debt, just from the recurring revenue of A-list members, they're able to easily buy all of these shares back. And the big thing about this is that this cancels the remaining notes. And so this is obviously very good news going forward. And I definitely do think that it's a big thing that we're still able to pay off debt because ultimately that's what's going to bring AMC to the next level. Now, another big thing, and this is still not confirmed and it is all potential one big coincidence, but is the whole timeline that's ongoing. Right now, we have Rowan Kitty brother talking about AMC. Then we have Ryan Cohen coming out to talk about buying eBay. And then we had all of these things going on. Now, there's a big potential of a potential partnership between AMC or GME that's flying around right now. This is still a big rumor. But it's the fact that all of these things all happening at once, it definitely is something that it's all a major coincidence, but could signal to a big thing happening. Now, a big reason for this is because if AMG were to acquire, or GME were to acquire AMC, then this is two of the biggest retail investors communities under one roof. Gaming, movies, merch, events, loyalty ecosystems. You can think about how powerful that can be and why exactly shorts will try and push this narrative away, because this would be everyone uniting together to fight back against the short sellers. Now, on top of this, for HYMC, and this still relate because AMC still has investment, some apes have bought into it that I know of, and you can see more and more people are still buying into HYMC. I definitely think that's a good thing moving forward. As opposed to the reverse repo right now, we're seeing them fluctuate, going to 2 billion. Suddenly there's a big need for injection of money again. And that's already a big tell of what's going on within the system. And then a big thing about this, just like we mentioned earlier with the car short squeeze, apparently Unson Fund was also caught into this, and that they have a big position that they could have largely been burnt. So you start to see kind of how short sellers are all within the same positions and they're all the same ones getting burnt. So you can imagine why they don't want AMC to short squeeze. Also, the naked short ban on South Korea, and you can see how well the market has been doing. Now, granted, because of the recent memory stocks, and especially you got two of the biggest ones that's in South Korea as well, it definitely played a big part. But the fact that they stopped naked short selling and now all of a sudden the index has been going up, it definitely is something to wonder. And it's something that potentially we could see America obviously handling that as well and implementing it. And then finally, we're seeing this whole short and distort, kind of the whole lawsuit between Andrew left. And this is something that would bring light to a lot of things, but like we've said, also set something straight within the community. As always, this is Financial Advice, and I'll catch you guys next time.